Breaking news, the Federal Reserve just cut interest rates by 50 basis points. Everyone thought that they were going to do a quarter basis points, but they surprised all of us. Quantitative easing starts today. There will be way more rate cuts coming in the future. So why did the Federal Reserve cut interest rates by 50 basis points instead of 25 basis points? Do they know something that we don't? So this is what came from the Fed's statement today. The Federal Reserve believed that the economy is strong. They also believe that the strength in the labor market can continue. They also believe that consumer spending remain resilient. Also, inflation is coming towards their 2% target but still remains above. If everything is so good, then why does the economy need a 50 basis point cut? To me, in my opinion, I think the 50-point basis cut is to prevent a recession. The last two times that the Federal Reserve did a 50-point basis cut going into a quantitative easing cycle, the economy went into a recession. That was January 3rd, 2001, and the S&P 500 fell down by 54% in a year and a half. And the next time was September 18, 2007, and the S&P 500 fell down 54% in the next 12 months. So according to history, we might be heading towards a recession. I want to touch base on the labor market because that is the main reason why we might be going into a recession. So here's what Jerome Powell, the chairman of the Federal Reserve, had to say about the job market.
Thank you. Colby Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply? Or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. Meant by many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market, but this is more sort of 2018-17. So the labor market bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, the retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
And just on the point about starting to see rising layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So our plan, of course, has been to begin to recalibrate. And as you know, we're not seeing rising claims. We're not seeing rising layoffs. We're not seeing that, and we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that, because there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions meeting by meeting.
That's all for the video. Let me know what your take is about the economy in the comment section. Be sure to check the caption down below for some free stocks with Webull. I'll see you guys in the next one.